Okay, so the next problem is going to be the actual problem that you have for your homework that I'm going to start you out with because they didn't have the B version available in Cengage. So I just assigned the A version in Cengage for you this time. And it's also going to be what's included in the Excel file that's in Canvas. So I'm going to work a few of these and do some journal entries for you and kind of show you how the lay of the land, so to speak. And then I'm going to work part of the second part of it for you. But mostly I'm going to let you finish it because you'll be well prepared to do it by that point. So we'll start out this problem. It's easier if you use the textbook, if you have a physical copy, because that way you don't have to flip back and forth between the chart of accounts and the list of journal entries and the entry here on Cengage. But if you don't have the physical textbook, you still can do it from the Cengage, of course, but it's just if you have the physical, it's much easier. On page 117, the problem is listed. There is a glitch in the problem, or a difference, I should say, between Cengage and your textbook. If you have the physical copy of the textbook, or at least the version I have, on page 117, there's two dates that are not in agreement to what the solution set shows in Cengage and this problem that you see right here. So I'll just highlight them and we'll get that out of the way first. These two transactions right here, the date is off by 1 day in the textbook. So we're going to use the date Cengage is using because that's the only way they're going to give you credit for getting it correct. So on my textbook, I just went to page 117 and on the transaction list for paid rent of $500, it says it happened on January 1st. And I just marked the first out and put second so that it would match this. And then on the very next entry, purchase office supplies on account, $300. I marked that 2 out that's in the textbook and put a 3 so that it would agree with the Cengage. And that's the only difference that I can find between these problems in the Cengage and in the textbook. So once you just change the date on those 2 transactions to be the 2nd and the 3rd, then you'll be fine. It's all going to agree. If you happen to forget and you just enter it as what the textbook is showing, it's going to show you a glitch when you do check my work just for that date. It's going to say, if you put in 1 for the paid rent, the January 1, it's going to say that was incorrect because they're looking for 2. And the same thing on the purchased office supplies on the date for the journal entry. If you put in 2, it's going to say, no, that's wrong because 3 is what the Cengage problem shows it as rather than 2. But anyway, so just be cognizant of that. I just changed them in my textbook and then I'm good to go. So now I'm going to be going by this data set that's in the book, and rather than have to flip back and forth from on the Cengage site. But in any case, here we go. Let me show you what they've given you. In Crichton, opened Crichton Consulting. She rented a small office and paid a part-time worker to answer the phone, make deliveries, and here's her chart of accounts. So thank you. Gave me a chart of accounts. These are only accounts that you're going to use. Now, later on, when we're doing problems, sometimes they'll show you the chart of accounts. And it means if you don't find the entry you need or the account name you need for your entry, then you can add an account that you would need. But in this case, in these early stages of what they're showing you, every account you're going to need is right here in the chart of accounts. So they're just showing you pull from these accounts. And so in the journal entries, they're going to have a place to put the date. They're going to have to play a place to put the account name and the amount, just as we know we have to make a journal entry, but also they'll have a place for post reference. And on this one, that post reference on the journal entries, the post reference is going to be the account number. So you see how they have the account numbers listed for us for assets, liabilities, owner's equity, revenue, and expense. Notice that the revenue account is called a different thing that we haven't been used to. Again, rather than saying the word revenue, it says consulting fees. So every time you have revenue from your customers, that's what you're going to code it to, is this consulting fees account. So I would prefer that they call it a revenue account, but they just don't ask me. So that's the way it is. And if you remember, every time it says expense, you can pretty well, I can't think of a case where it would say expense that it wouldn't actually be an expense account. So that does help us to know that it's those are all going to be expense accounts. Since we know the normal balances of all these things, it makes it easier to make the entries if we just remember that assets are increased with a debit. So if it affects any of these accounts and it's increased, it's going to be a debit. If it affects these accounts, then it's a decrease. It would be the opposite of debit, which is a credit. So the normal balance tells us that debit is the normal increase that we will make to these asset accounts. Liabilities are the opposite of that. They're normal credit balance. Owner's equity is also normal credit balance. So anytime the liabilities or equities are increasing, it would be a credit. If you had a case where you had a contra equity account like drawing, then that would be increased with a debit. And then revenues increase equity, so they're increased with a credit. And then expenses decrease equity, so they are increased with a debit. So the ones that increase with a debit, when you see something increasing about assets, assets, drawing, or expenses, those are all debits. So those are the things that debit is a normal balance: assets, drawing, and expenses. Okay, so revenues and capital plus liabilities are increased with a credit. So that's just, we already know that, but I'm just reminding you before we start these transactions. So here's the list of transactions. And again, they're listed in the textbook. I'm going to be going by that. And then we're going to make a journal entry for each of these. I'm going to make the first little part. See how hang on just 1 second. Somehow I've already got the answers in there and I wanted to do it one step at a time. So just 1 second, I'll be right with you. Okay, so I've got the right screen now. Okay, so these are the transactions that we're going to record. I'm just going to do a few of them, well, quite a few of them, and then I'm going to leave the rest for you to do. Now, the best thing to do when you're learning, if you have time, is maybe watch a little of me solving, and then what you do is you work some of it, then turn it back on. Maybe watch an entry or two of me solving it. Then pause the video, you complete as much as you can, and then go back and watch me and see if it came. I did the same thing you did. So that's the optimal way. Otherwise, you just watch me and then you wind up going ahead and carrying on from there. Either way works. I'm just telling you that's another option, to pause the video, work on it yourself, and then let me explain the rest. Okay. All right. So the first thing that happened on January 1st, Crichton invested cash in the business, $10,000. So the best thing to do is always approach the part you know best. The part you know best is the part you should do first. Okay, so I know if cash came into the business, I'm going to debit cash. So that's what I'm taking first. And I'm going to put the $10,000 in the debit column. And I also am going to put the $10,000 in the credit column, because that puts me with most of the credit for the problem already. And all I have to do now is figure out what account name to credit. Well, anytime you see an investment of cash from the owner in the business, it's always going to be a credit to capital. So I'll look through all these. Hey, there's a capital account. And there was also another Crichton account that was called drawing, but that's not what we're doing. We're putting money into the company. So then the other thing we need to do is find the account numbers. We're looking at the chart accounts for that. It's just presented in the book right before that. And it's listed right here. So you could still do the problem easily with just this screen, just be flipping back and forth more than I will be. The account number for cash was 101. I'm looking at the textbooks, the reason I know that. And the account number for the Crichton Capital is 311. So we're putting the account numbers for the general journal. We use the account numbers for the post reference. Okay, so that's the first one. Yay, we did it. The second one, pay the rent. Now remember, this is one of those where the date is different. We didn't have to enter the date. They have it there for us. So it says January 2nd, pay the rent, and we're going to just record it. So when you don't know exactly which one you want to start with, you could just put the amounts. You know there's going to be a debit and a credit every time that you make an entry. So it's fine just to put in the debit entry first. This is always going to be listed first. And then the credit entry will be second. And one thing I don't like about their presentation here is they don't have it this way, but you know, in real life, you always have to list the debits flush with the margin and first, and then the second, the credit part of the entry is indented. So you see how they don't have it indented? They easily could have done that. That's my pet peeve. I would rather them do it the way it should be. So I wanted it indented. They didn't do it. But if you were making a journal entry, in reality, you would credit when you make the credit entry, you would indent the account name and you would then put to the right or indented the amount. So they do have the amounts where we can put them as a left and a right for the debit credit. So this is all good except for I needed an indent right here. But okay, so we have that entry recorded, and then what we've got on the second entry is we're trying again now to figure out what happened. We paid rent. So here's the part I know best. So I do that part first. If we paid something, that means cash just went out. So my credit account is going to be cash. And then I look at it again and I say we paid rent. Rent is normally paid in advance, but it would normally be paid at the end of 1 month for the next month. This one was paid on the 2nd and it didn't say it's for next month. So they are actually assuming this is rent expense. The other thing is, look at the choices. They don't have prepaid rent for a choice. When you pay rent, it's either, when you're paying the expense of rent, it's either this month's rent, so it's rent expense, or it's for a future period, so it's prepaid rent. So if you're paying a payment for rent, it's either prepaid rent or it's rent expense. So let's pull some account numbers. Rent expense under the expense list is 521 and cash 101 still. Every time you enter an entry for cash, you're going to enter that account number 101. On the 3rd, we purchased office supplies on account. So office supplies is an asset. So I'm going to do that first because I know that's a debit. Office supplies, and it was for $300. If I had been paying for these in cash, I would credit cash right now, but it didn't say I paid for them, did it? It said on account. So if I'm buying something, but I'm not paying for it, I'm going to credit accounts payable. So now I've got that entry. I just need to put the account numbers in there for it. Office supplies number is 142. And accounts payable is 202. And I'm just looking at the textbook when I look down to tell you what the account number is. Okay, everybody's cool so far? So we've got 3 entries in there. Let's check our work and see. Now, if you have just a lot of entries like this problem has, you might not want to waste your check my works. See how much information is in this problem? So I think I only have like 3 check my works on there. I'm not certain how many you have, but you can probably tell on yours when you look at it. Let's see, going back up here, I've only done a little piece of the problem, but so far what I've done has got a lot of check marks, so I'm good. So I can feel safe to keep on with what I'm doing. All right, so I'm gonna do just a few more and then I'm gonna leave it for you to make the rest of the entries. So I'm gonna make 3 more entries. On January 4th, we purchased office equipment on account. If we bought something, but we didn't pay for it, we know we're dealing with accounts payable. And we're dealing with office equipment, which is an asset account. We purchased the equipment, so that means we increased the asset account, office equipment. And the amount was $1,500. The entry's got a balance, so I'm going to put the $1,500 as a credit. And what am I doing? I'm not paying cash, but I'm going to pay for it later. That means accounts payable. Okay. So now I need some account numbers for office equipment. Looking at the chart accounts, I see it's 181. For accounts payable, I see it's 202. And then January 6th, we received cash for services rendered for 580. If you don't know what account, you just draw a blank or something, put the amount in first. Then go back and say, okay, I got the amount. Now what just happened? Receive cash. Oh, I know what that is. If you receive cash, it's always an increase to cash, which means a debit. Then all I have to do now is figure out what am I going to credit? What was it for? Services rendered. Oh, so it's revenue. Look at your chart of accounts. There's only one revenue account. Consulting fees. Okay. So let me see if I can find a consulting fees in the pull down. There it is right there. That's the only revenue account I have. So I feel very good. That's right. So now one more journal entry, and then I'll go to show you a few postings. Oh, wait, first let me get these account numbers back. Cash is still 101, isn't it? Consulting fee, while I was looking at that chart, I should have pulled the number 401. There it is. January 7th now, paid the phone bill. We paid something. That means cash, doesn't it? And okay, I still remember that account number is 101. How much did we pay? $42. So I can put the amount, whatever part of the entry you really know, do it. Just look back over it afterwards and make sure if every entry has an account name, an account amount, and an account number. Okay. So, okay, what is it again? It's a phone bill. It doesn't say it's for a future period or for the past period that we're paying late. It's just saying the phone bill. So that's current month phone bill. So it could be called utility expense or phone expense or telephone expense. But if it says phone bill, you could first try the word they use, which is phone expense. And if it's not there, look for telephone expense or utility cost or utility expense. But just it's probably not prepaid unless they said it's for a future month, it's not prepaid. All right, so now the other thing you could do instead of just guessing or looking in the list first is look at the chart of accounts. 525 is account number and it says phone expense. Okay. So my advice would be figure out what account you want before you touch the pull down. Because when you start looking at that pull down, you start second guessing yourself about what could it be one of these? But so the best thing, especially as we go along, whenever you would be dealing with prepaid telephone bill and phone expense might be sitting there as a choice, you need to make sure that you know what you want to code it to before you pull the menu down. Okay. All right. So now there's going to be a bunch more. See how there's 2 more on this little sheet. Then there's a whole nother sheet here and a whole nother sheet after that. All those are the journal entries from January 1st through January 30th. So that was the first directive to do all these journal entries. The second one, the first directive was actually to set up the accounts, but Cengage took that care part for you. The second entry was to journalize the transactions. And then I just demoed that and you're going to finish it up. And then the third one is post the transactions. Of course, on yours, you'll have to enter all of them again. I'm just showing you what you would do. On the third transaction, you're supposed to post the transactions to the general ledger. So I'm just going to post some of these transactions that we have and talk you through what you would do after that. So these first ones that we had, let's just post a couple of these. The first transaction had a debit to cash of 10,000 and a credit to Creighton's Capital for 10,000. So I'm just going to scroll down here until I get to the general ledger accounts. Cash had a lot of transactions. You see that? We get to transaction number 2. And it says general ledger at the top. It's got the account name and number. So what I'm going to do is I'm going to pick the date, January 1st. It's on page 1 of the entry pages. So the way you knew is it tells you in the data set that January 1 through 10 is on page 1, January 12 through 24 is on page 2, and January 25th through 30 is on page 3. That's how you know what the reference is going to be, because that's talking about which journal page. The other hint for you would be when it's got a separation, that's a separate page. So see, all the ones I did were on page 1. And then if you go down, you see page 2 starting with the January 12th entry. Page 3 starts with the January 25th entry. So that agrees with what they're saying in the textbook too. So that's what the J1's about. And so the entry, we don't go back to the transaction now to figure it out. Like when we just had T accounts on that one problem earlier, they want us to go without the journal entry, but we have journal entries now. So we're totally ignoring the transactions that happen. And we're going by what we recorded in the journal entry. And we're going to post exactly what we have here. So we're going to account number 101, we're going to post a $10,000 debit. If I can get back to it, that is. $10,000 debit for journal entry 1. And the ending balance then would be 10,000 because that's the only thing that's happened in that account, right? So you just do a little subtotal as you go along. Kind of like if you were running a checkbook and you're keeping track of what the balance is now. And so the Crichton account, the capital account, took the credit on that entry and ended up with a credit balance. And that also came from journal entry page 1. And it was also on January 1st, right? So far, that's good, right? We're just posting each transaction as we made the journal entry. So the second transaction would be a debit to rent expense of $500 and a credit to cash. I'll do the cash first. Credit to cash. This happened on January 2nd. It's also on journal 1 because all the ones I did are journal 1. So now the balance, I had a debit, then I made a credit entry. So that ate up part of my debit balance. So now I only have 9,500 in the cash account, right? Okay. And the other part of the entry, I'm sorry, flipping back and forth to make sure I don't make a mistake, was a debit to rent expense for 500. There. It's still journal 1. It's January 2nd. And I chose the wrong date, but there it is. And the ending balance at that point after the entry is 500. So that's all I had to do to that one. So that gets me a transaction, the first transaction and the second transaction posted. Then I go back to the third transaction and I just methodically go through each one and post each one to the accounts. I will post one more and then I'll do a little subtotal. This January 3rd, we had an office expense debit of $300. No, it's not office expense. On January 3rd, office supplies debit. Account number 1, let's go by the account number. That won't make it so many mistakes, right? Account number 142 gets a debit of $300. Here's the account numbers over to the right. 142, we verify that it says office supplies. Yep, that came from journal 1. It happened on January 3rd. And it was that $300. And the ending would have been 300 after that. Then we go back to the other half of the entry. For January 3rd, it is accounts payable for 300 credit, and it's account 202. So I'm scrolling down till I get the account numbers. 202. Here it is, accounts payable. It's coming from journal 1. Happened on January 3rd. Oh, my fingers just won't pick it. Sorry, should use a mouse probably, but I'm lazy. Okay, sorry. Okay, so that's the accounts payable credit for 300. And that leaves you at that point with a balance of 300, and it's going to change some more. Okay, so if you record every entry and then you take each of those entries. Now, if there's a way, if you can get it to print or capture the screen or something so that you could see those without flipping back and forth when you start to post, that would be a lot easier. So the thing to do would be either screenshot these and print them, or take a picture of them with your phone and look at the picture so that you don't have to keep going back and forth and back and forth and back and forth. But that's my recommendation. I mean, I'm sure some people tell you not to do that kind of thing, but I personally think whatever makes it easier for you to learn is totally fine. As long as you're knowing what we're doing at the end. I'm not advocating any cheating type thing. I'm just telling you it's easier to not have to flip back and forth. Okay, so once I have all these journal entries once I have made all the journal entries, I can then capture them some way so that I can look at them without having to scroll back and forth, and then post each one of them individually to the general ledger. Okay, and so once I do, then I'm going to have a lot of entries to cash. So let me make that smaller so you can see. Okay, it's going to be a lot of entries to cash, and at the end, you're going to have an ending balance of cash because you've been making a cumulative total all along. So the ending final balance, that is going to be a debit balance, of course, in this balance column for the cash account is going to be under the balance area, and the debit last value that you have there is going to be your ending balance for cash. And that's the amount that you're going to take to the trial balance whenever it asks you to bring forth the trial balance. So for this part, you're just posting all the entries from the journal entries to the accounts that were affected by that entry. And then you're going to pull a trial balance from the last entry. So cash is going to have a debit balance for whatever the ending balance was and nothing over in the credit balance. So since I have plenty of check my works because I'm not doing the whole problem. So I'm going to, just for grins, see if they're going to require there to be a 0 in that account, in that credit column. So I'm going to try the cash account. The ending balance, this is just a tip for you. This is the actual balance, is $10,021. That's where you're going to end up with the cash balance. And I'll just go ahead and give you this $300 for cash supplies because we already entered the only entry for it. And the office supplies was 300. Sorry, I don't know what I said exactly. Office equipment is 1,500, and we made those entries. Those are the ending balances of what the transactions we already made. So I'm just going to check my work now just to see if they're going to give me a glitch. Oh, they didn't. Okay, so some programs make you put a 0 in the counter. It's not supposed to be there, but this one is being nice and it's saying they only want an entry where it belongs, which is perfect. So there's only going to be debit entries on the accounts that have normal debit balances, and there's going to be credit entries on the accounts that have normal credit balances. So whatever their ending balance is, this is going to be their normal balance for this problem. You're not going to have any anomalies where a debit balance account, a normal balance account of that account turns out to be different than the ending balance. It's going to be, if it's a debit balance account, it's going to have a debit balance. If it's a credit balance account, it'll have credit. And then when you're finished, you're going to add up all the totals. And just because I'm helping you out this time, I'm going to give you the total that the trial balance is supposed to be so you can feel comfortable whenever you actually enter all your amounts. You're going to have the ending balance for both of them that is going to equal one another. It's going to be the summary of this line of debits and a summary of their line of credits in the trial balance. So those two numbers are going to agree with one another if you get it all correct, and it's going to be 13,460. So that's the first piece of it. And so that they have split this problem into two, but if you click next right there, it's just going to take you straight into the continuation. And what they actually have is they restate the chart of accounts. They don't restate the transactions because we're not going back to the transactions, are we? And so they restate the chart of accounts and they restate the trial balance. So this is just some check figures just for your information that you should be coming to when you do the first part of the problem. It's going to show you your ending is showing you that your ending balances for each account should have been this. So they want you to go from there and make the financial statements. So using this, I'm going to start the financial statements and talk you through it. So for the income statement, I'm going to pick the headings that need to go on these statements. And you always start with an income statement because you're going to need the bottom line net income to flow into the owner's equity statement. And then you do the owner's equity statement because you need to know what the ending capital account is to flow into your balance sheet. Okay, so that order is very important. Income statement, owner's equity, and then balance sheet. All right, so you need the headings to be proper. So for an income statement, you start with the revenue and you put the only revenue account you have listed right there with the amount, the ending balance of it, right there in the little box. Then you put the heading for the expenses and you list each expense one at a time. And what they have done is, see if they give you a hint about what order, because they don't seem to have the order that I want them to have. They put it in order. Maybe they don't have a gotcha on what order it has to be in. A lot of these programs want you to put it in a certain order. So when you read the instructions, make sure that it didn't say it needs to be in a certain order. I don't see anything. See down at the bottom? Nope. So just go ahead and put them in there. And what I would do is put them in there in the order that they are on the trial balance. And so I don't know if they're going to give you credit for no matter what, but whatever order you have them on this trial balance, see how they started it by account number. Okay, so they sorted by account number. So just put them in the same order that they are here. Start with the wages, then advertising. So I'll just put that in, whatever the amount is. And then the next one down the line, we're just putting them the same, exactly like they were on the trial balance. So all these accounts in order go into your income statement, and then you summarize all the expenses as total expenses. Put that number right here, just a total of all these. And then that leaves you with your net income or loss. If the revenue is higher than the expenses, it would be a net income. If the expenses are higher, it would be a net loss. Whatever the amount is goes here. And then you can just check yourself if you need to. And then what you do is that net income is going to flow into the statement of owner's equity. You're going to start with Crichton's capital at the beginning, which since this is our first year, is going to be 0. And then you're going to add the investments that were made that she made to come up with the total investment she has in the business. And then you're going to, the next part after that is going to be adding the net income and reducing it by withdrawals. And that's going to give you a subtotal of how much did the capital either increase or decrease. In this case, it's going to be an increase. And so I'm not putting the amounts because you're going to come up with that as you work through and pull. You're going to pull your drawings from this trial balance that's right in front of you. See how drawing wound up being $100 right here. That's the amount that's going to go down here as drawing. Withdrawals and drawing is the same thing. And so then you'll have the net amount, the total investment plus the increase in capital will bring you to the ending capital account. And that's going to be the ending capital that's going to show up over here in owner's equity as ending capital. Okay. And then the balance sheet pulls all the rest of its numbers from the trial balance, the first part of the trial balance where they showed cash, office supplies, office equipment. Those are the assets. They go on the balance sheet. Then accounts payable goes on the balance sheet. The only thing you have to be careful about is when you do your balance sheet, you don't just pull capital from, that's funny because he's pulling it all together for me. Good. You can't just pull 10,000 as your capital that go on your balance sheet. You have to use the number from the owner's equity statement because it's summarizing all this. Capital plus the revenue minus the drawing first, then plus the revenue account minus the expenses. And that's the net capital that winds up showing up on the balance sheet. Okay. So after you do all that, you are going to come up with a correct answer there. You check my work, find all those cute little green check marks, and you're good to go. Then you just submit and we're all good. Okay, you can do it. Thanks.